So welcome back to my channel. So today's topic is, what is the best entry between an order block or a fair value gap? Well, this is a question we traders, this was like, I won't lie, this was one of the problems I had when I started. I was really frustrated about this, and I believe and I know that many people out there are struggling, like, to know, okay, what should I use as my entry? Should I use order block or fair value gap? But I'm going to make it very simple for you here to understand. You know that market moves in this format: higher high, higher low, higher high, higher low, higher high, right? Now, what is the next step that you do when you do your analysis? The first thing we look for first is a break of structure, which we are seeing here. We label it as our BOS. We send that break of structure here as our BOS. That's the second point that we take note of. The third point that we take note of is our Fibonacci. We take it from what? We take it from the high to the low, from the low to the high for a buy momentum, and this is for a sell momentum. We take it from the high to the low. Now, majority of the time in this below 50%, because it's a buy, we'll be looking at what? We'll be looking at the last bearish candle here, which is the order block, and we'll be looking at what? We'll be looking at the fair value gap around here for market entry. Now, will you want to place your long position from here to here in a form that, oh, let me put it here, so in case market touch the fair value gap, or in case market don't touch the fair value gap, at least it touch fair value gap, I'm already in the trade, or it touch my order block, oh, I'm already in the trade. So all this do depends on you. Now, this will make your stop loss to be so much, you'll be risking so much in the market, you'll be wondering and you'll be confused. But how do you make this an easy format for you? Well, we have what we call a two-time frame rule. My coach always preached that to me. Said, okay, when you're having issue, always remember your two-time frame rule. No matter how much confused you are, let that be a backbone reminder that what we call two-time frame rule. I have a video on that on my channel. You can go there and watch it. Now, an example is here for you. You can see here, I'm going to delete this section here, or let me leave this section here. You can see here, what do we have here? This is the highest swing point that is here on a 4-hour chart. We have what? A break of structure that is here. Can you see that? We have a break of structure that is here, right? Then what is our next point to look for? I'll take my Fibonacci from the low to the high. Can you see that? That's rule number 2. Then what am I seeing here? I'm seeing a fair value gap here, and also the closest fair value gap, which makes that order block to be very strong. I'm seeing one here, and I'm also seeing what? An order block here. Can you see that? Now, I will mark all this fair value gap. Now imagine if I do not understand the two-time frame rule. I'll place my long position from here. I'll place my long position and put my stop loss here and say, I'm so scared of market kicking me out. Let me put my market there and monitor the trade, which is actually going to expose you to a lot of stop loss with lesser gain. Independent, in case you want to use one-to-one RR. But the beautiful thing is the two-time frame rule comes in. You go down to 1 hour, or you can go as less as 15 minutes. You can go and be waiting for markets to break a swing point. Now, what am I seeing here? I'm seeing here that market shifted structure in this swing point. Can you see that now? There was a swing point that was being broken. So it's advisable you can go on my channel and watch what we call swing points. That is what we're looking for, a swing point in the market. Now, what am I seeing here? If I go down to as low as 15 minutes, that swing point, you can see that it's formed a break of structure here. And what am I seeing? In that same 15 minutes, on my higher time frame zone, I'm still seeing a shift in market structure here. So either I take my entry from here as what? My breaker block, or I can take it from what? I can take it from my mitigation block here. But you can see that the entry was from my breaker block here. And what happened? I put my entry on the breaker block. I'm going to delete this Fibonacci from here so it can be very clear for you. So sorry about that noise. I'm going to make it very clear for you here and put my stop loss around here. And this is the other block. I can come down to 1 hour, see for the same swing points breaking up. And what will I do? I will target the 4 hours high up here. and that will give me a good risk to reward 1 to 5. And you can see it, right? And you can see what market did. Market still came back to the breaker block, and if I go down to my 1 hour, I will see that market came down to where market, this was a swing point that was being broken, and market came down to where my fair value gap here. Can you see it? A fair value gap here. So for those that miss this direct entry here with the breaker block, can still come back because market still came back to the fair value gap. But if you look at it very, very well, I'm still on a break of structure on what? 4 hours. And what have I done? I have done 1 to what? 1 to 5. Let me show you other examples on the chart. I want to show you that it's very, very plain here so you can understand it better. Even with the ones of change of character, let me show you another good example. Now, we have one that is here, right? Let me expand this chart for you. Now, what am I seeing? This on the 4-hour time frame. I'm seeing what? The first rule. The first rule is what? The first rule is a shift in market structure. Can you see that here? A shift in market structure. What is our second rule? Our second rule is using our Fibonacci from the high to the low. Because what is what create a break of structure. Now you start looking for a reference point. You start looking for what? Your order block. You can see market reacted there. I start looking for what? My fair value gap around here. Now these are institutional reference points that are very important in the market. You can go as low as 1 hour. You're looking for a market shift around here. Market shifted here. You can see that, right? You'd have also hit stop loss. You can see, but what happened here? Market also shifted here. You can see that, right? And you can enter your under entry from here, mitigation block. You can enter here, mitigation block, put your stop loss above here a bit, and come down to 4 hours, and you target the low here. Can you see that, right? You can target the low. So instead of you going directly or putting your entry around here, it becomes lower here. It depends on how you want to enter your trade, and target the below 1 to 2. You can come here for those that are swinging, but if you are not swinging, you can come down to as low as 15 minutes. Low as 15 minutes. You can see, right? Last 15 minutes, the same entry also here too. You can see there was a mitigation block here, but now your entry is going to be a bit high around here, because while the mitigation block is around here and your stop loss is up here, and also the same low to give you 1 to 4 on 15 minutes. So this is how we do it. So when you mark your fair value gap or your order block in the main time frame that you want to enter, you can go down to a lower time frame. If you're using a 4 hours, you can go down to 15 minutes. When it gets to those points, either order block, breaker block, mitigation block, fair value gap, rejection block, you wait for a shift in market structure in those zones and you enter your trade. If you're marking on 1 hour, you can go as low as 5 minutes or 15 minutes also and mark your entry. If you are using from 1 day, 1 hour, 4 hours, change of character or shift in market structure and enter your trade or your price, whatever you want to enter. So I hope this video was beneficial to you. Don't forget to subscribe on my channel. Ask your questions on the comment section. I'm always very excited to answer all questions asked on the comment section. You can email me if you want, and don't forget to subscribe again. Thank you so much.